Morning, Trade Pro. Sound check 1, 2. Hope you guys are having a fantastic day. I love white t-shirts, don't you guys? I got so many white t-shirts that I'm single-handedly propping up the white t-shirt economy. Guarantee it. All right. Today we got a good morning market update planned for you. We're going to talk about a few things and then get a last look of my hair from a haircut that I did myself, because as of Monday, we're getting a pro cut, clean and in the zone, and it's going to be fun. All right. I feel like I cut my hair so many times by myself that I don't have any professional cuts left anymore. This is all my work now. So I'm going to get it fixed. Stephen H, I was just kidding, brother. I was making a bad joke. Yeah, I'm not funny sometimes. I got dad jokes all day long, though. Let's get into it. Tech earnings yesterday drove a huge upside surge in the overall markets. All right, led by Amazon, Facebook, Apple, and Alphabet. 4 of these companies just a day ago were getting grilled by Congress, a subcommittee, and they were getting asked a lot of questions about anti-competition, about their marketplaces, about their acquisitions and how they acquired companies just to eliminate competition rather than use technology. And then a day later, they come out with blowout earnings. All of them. Every single one of those companies destroyed it, except Google. Google struggled a little bit more. But they all saw their market value combined jump by $250 billion yesterday alone. All right. Earnings were good. Let's just do a quick little summary. If you own these companies and you care to do a deeper dive, you can. You should look at their top line, bottom line. Look at all their line items in the book, balance sheets, income statements. Go for it. But I don't really have time for all that. I'm a day trader. All right. For Apple, they beat bottom and top lines, and they announced a 4-to-1 split. I want to talk to you about Apple's split before we go into the other companies. Okay, this is important. Why does a company split? Well, what it ends up doing is it gives you more shares. So for every 1 share you own at $400, all right, you're going to get 4 shares at $100. So post-split, your valuation is the same. You still own $400 of Apple stock. It's just the multiplier is different. So if you have 1 at 400, now you're going to have 4 at 100. Okay, so what that does is makes it appear to be cheaper. People are going to say, why would I buy Amazon at almost 3,000 when I could just buy Apple at $100 a share? But that in itself is the problem, is that there are people out there doing things that they don't even understand what they're doing. Okay, what the per share price is of any company means absolutely nothing about what it's worth or its value, because the multiplier is the outstanding shares. So anywho, Apple splitting to make it appear as if though it's cheaper and it's got more value behind it, blah, blah, blah. Amazon doesn't do such a thing. They don't split. Warren Buffett doesn't split either. His shares are over 100,000. They were. Who knows what they are now? I haven't checked in a long time. So that's Apple. Amazon, sales exploded. Operating income doubled, all right, versus a big drop that analysts expected. So Amazon surprised as well. Facebook, 11% revenue growth, stronger than expected sales guidance. All right, also came out really, really positive. It beat a lot of Wall Street's expectations. Google had the first ever decline in advertising in a year-over-year basis from their ad revenue. All right, that's one of their biggest revenue generators, but they did have their cloud computing sales increase, which is an important metric. All right, so they're diversifying their business line, and it was still positive for the company as an overall. All right, combined, Apple, Amazon, Google, and Facebook, these 4 companies have a $5 trillion market capitalization. It's about 1/5 of the entire S&P 500. Okay, think about that. It's kind of mind-numbing. So with the stock split that's happening for Apple, by the way, this is what's driving a lot of the upside. With the stock split in Apple, it's going to widen the Dow and S&P 500's performance differential. What do we mean by that? Well, if Apple splits, because it's not a capitalization weighted index for the Dow Jones, it's just share price based, and what that does is it reduces the exposure to technology in the overall Dow, which is a blue chip market, which I think is good. The Dow was never meant to be this massive technology sector anyways, but it holds names 30 of the top and the biggest blue chip companies, the most established, most well-positioned. In the future, if tech continues to outpace the rest of the market, the Dow's going to lag and way underperform. It already is this year for that same reason. S&P's up 0.5% in 2020. All right, Dow Jones is down 7.8. So when you look at overall the impact of these stocks, tech is now going to have a less meaningful influence on Dow Jones, single-handedly by Apple's split. That's the downside when you're weighing your index by share price and not market capitalization. All right, that's what's happening. You need to know that. It's important. And that could cause some activity in funds who need to mimic or replicate the Dow. All right, let's move forward. Let me just take some comments here on YouTube very quickly. Fernandez says, you look healthy. Well and healthy. Thank you, Fernandez. I made a lot of lifestyle changes recently, and hopefully they're starting to pay off. Given up a lot of the bad habits, started eating very clean, hydrating a lot. I got one jug here of lemon water. And then another thing here of my version of coffee. Haven't drank coffee, just staying hydrated, eating well. Who would have thought that's all you need? Jeez. Hearing that all my life. Let's talk more about the stimulus package. What would be the direction of the S&P and NASDAQ? What does that mean? Srinivas. Just explain so I can help you out. Debojit says, did you become a father yet? No, August 15th is the due date. And I can't wait. All right. Here's the thing about the stimulus package. So remember that currently people in the U.S. are receiving a $600 a week supplemental income benefit. All right. The Senate is gone for the weekend. Steve Mnuchin, Mark Meadows, Nancy Pelosi, and Chuck Schumer have committed to meeting today one more time and tomorrow. They're going to work on the weekend. All right. As this benefit expires, the $600 a week benefit expires this week, this Friday. Right now, basically, it's expired. All right. Nancy Pelosi and Chuck Schumer said that they don't want a temporary extension. That's nonsense. It's worthless without a comprehensive deal. That was their position. And so this becomes a bill that is getting absolutely no traction. Steve Mnuchin said they're still very far apart. The market's discounting this, all right? And I'm going to tell you this. This is one of the biggest risk factors for this rally currently. Yes, tech did fantastic. That's amazing. People bought $1,300 iPhones on $600 supplemental income checks. Great, fantastic. However, you got to remember this. Personal income just dropped 1.1%, a further 1.1% in the month of June, according to the data that came out this morning. All right. Meanwhile, U.S. consumption for June went up 5.6%. Think about this. You're consuming more while getting paid less, and now you're losing an income supplement if you're taking it. It's a tough time. I understand that. It's a very tough time. And I think that absent more consumption, profitability for these companies could be impacted. And so this is a key concern right now in the markets, not just for me, just around trading desks around the world. So yes, we have a nice, but I'm not sure that it's not going to get sold off this morning. I'll tell you this. Yesterday, we started out with the sentiment, sell the market. Remember that? Sell rallies. Boy, did that work. We cleaned up yesterday. Today, I'm looking at this saying, yes, we got a nice tech pump, and we got up to 3270, 3273 3/4 on the S&P 500 market, all right, on the futures, not the index itself. If we can't take that level out at some point, I think people sell off all of their holdings into the weekend. Not all, but reduce some of their weight and their exposure, especially if you had Apple, Facebook, Amazon, Google before these earnings. These earnings pop, you have a gap higher as an open. Fantastic time to sell out of your position, take some profit for institutional money and for traders alike. So watch for a little bit of a sell-off. It seems like a very happy, giddy kind of tech sector driven morning, but watch closely. It could turn to some selling. Above the 73 3/4, all bets are off. We're running up buy stops. Get out of the way. All right. With the last day of the month today as well, if you're planning to trade to the closing bell, which I don't know why you would on a Friday, all right, typically most professional traders Friday at like 11:30 when the European markets close, they're gone. Like, what am I going to sit here for? It's not, start the weekend early. That's the beauty of this job. So if you are going to trade to the closing bell, know that there might be some rebalancing. It's month end. Institutions might want to move some positions, all right, sell some of their risk positions because they've done so well, and then buy some of the risk off. That's called the rebalance. All right, we wrote an article on it. Check it out on our website to learn more. That's a factor for today, especially in the afternoon in the later session, or in the later half of the session, which is from 1 to 4. All right, today's markets, Asia's down Japan's down 2.8%, Hong Kong down 0.5%, China up 0.7, India down 0.3%, Europe at midday, let's call everything flat because it's close enough. And futures in the US have advanced slightly, up to 0.5% on NASDAQ, obviously it being the key market that we're going to be tracking today because of earnings. Crude is up 0.5%, back to above 40. Gold's up 1.5 to just shy of 2,000. And Bitcoin's up 1.83 to above 11,161. All right. This morning at 9:45, we have Chicago PMI numbers right after the opening bell in the first 15 of trade. Watch out for that. 10 a.m. we have consumer sentiment. 1 p.m. Baker Hughes rig count, and that's it. That's usually the end of 3 p.m. farm prices. You don't want to miss that. The market mover. Just kidding. A little bit of sarcasm there. That's what I got for you guys. I hope you enjoy the day. Sending you all love, joy, and happiness. I will see you again, YouTube, on Monday. If you want to join us, be part of TradePro Academy. We do daily live trading rooms. After this update, we usually go in our trading room. The trading room is listening right now, actually. We also have a Sunday analysis webinar that gets you kind of prepared for the upcoming week, and a ton of other value. We provide so much value. I've been called crazy for the value that we give for the price point. I'll take it. Crazy is good. It means we're different. Gary, they're all dirty, Gary. All the TradePro t-shirts are dirty. Got to do laundry this weekend. Take care, guys. Have a good day, YouTube. Love you all. We'll see you on Monday. Ciao. All right, Boxy, let's do an oil update and set some levels.